taking a look at some simple patterns in the market, and I want to show you this. What happens if you buy at the open each day, sell at the close? In the month of July, it is positive 77% of the time. And so let's look at the monthly here. 77% of the time it's up $17,130, 9 trades. And in the month of July, the Nasdaq, for example, we're just talking about the Nasdaq, it's only up about 200 points. Nasdaq is only up about 200 points, and so it's up during the day, and also it's down at night. And I want to show you this. I'm going to show you the easy language code for this. It's even more profitable to trade it down at night. And we're looking at the last 2 months here. So if date is greater than EL date 5/20/2022, just looking at it since 5/20. We'll look at a longer history as well, and the time is equal to 1650, then buy next bar at the market. And so this is just a day session, and then we set exit on close. And so we're not using the stop loss. We're just using this to determine how many times the market goes up greater than it closes greater than its day session open in July, and you can see that it's a 77%. Let's look at how many times the market goes down at night. So if we short it on the close, and this just gives us, this kind of analysis gives us an idea of what's happening in the market, and then we're going to go back and look at it further to see how often this actually occurs. And so what happens if the time is 1650 and we sell short this bar on the close, and then we buy to cover next bar at market? So we short it on the close and cover the short at the open. And so we're short overnight when you do this. Let's look at the results. And it's extremely profitable. A really nice equity curve. You know, we're in a bear market, and so that would make sense. But what's unusual about this is it's short at night, long during the day, impossible to short during the day. So if you try to short it during the day, it becomes almost impossible, especially the last 2 months. If you go back to 5/20, I'm going to show you why I'm using 5/20. I'm going back to 5/20 because 5/20 is this date right here, and the market really hasn't gone anywhere the last 2 months or since 5/20. You see it's gone up, it's gone down, but it's about the same place. The market's about the same place it's been the last 2 months. And so in this bear market sell-off, we've kind of gone sideways for a 2-month time period now, and so the buyers are trying to change the momentum. As the selling momentum ends, the buyers are trying to change the momentum upward, and so that's why you see this intraday pressure to buy and go long. Now another interesting thing you could do here is to short it at the close and buy it at the open. You don't need to set exit on close because you're reversing. So if it's the 1650 and then we buy an next bar at the market, but if it's short on the close, buy to cover at the open and then go long. So it's reversing by going long at the open and going short on the close. So let's show you what the results are here. Since 5/20, and you can see it alternates between longs and short. Short at the close, long at the open. 53,785. This is just the last 2 months. So really nice results. The last 2 months going short at the close and long at the open. Such an unusual pattern though, and I'll show you why. So when we take out this date constraint and look back historically, if the just removing the date constraint, so we have more history beyond 5/20 to the current date, and we've got a couple years of data here, and then we do this, you can see how well it's done right here. And sometimes it gets on a run like that, but it's really done well. The magnitude and length that it's gone up, it did pretty well right here also, from March of 2021 through August of 2021. So you can see that here. You can see it here. But going back over the last couple of years or so, since January 2020, overall it's not a profitable pattern. We can look at it more historically as well. Let's go back let's go back 12 years. So here it is, going back 12 years. Obviously not a pattern that you want to trade. There are time periods when it works well, and right now has been one of those time periods where it's worked pretty well. And so the cycle could almost be over if it repeats the best cycles of the past. And so just unusual to be able to flip-flop, long day, short night, long day, short night. Being able to flip-flop back and forth like that would not be a reasonable approach to trading necessarily, but that's what's been going on lately. And one of the patterns we're sharing with you in this market as we dial in our trading systems. One more thing I want to show you in this video. Today, for example, in the market internals, you see the advanced decline line come down here, flat lines at minus, the low is minus 2,400. It's currently minus 2,100, so really close to the lows. It has not bounced at all. The market has sold off, got propped up, and has been moving higher most of the day since this time period, since about the first 30 minutes of trading. We're used to seeing that now. After 30 minutes, the market starts to get propped up, but the advanced decline line has not moved higher. So that's what's interesting. The indexes can move against the broader market internals, such as the advanced decline line. But it will be interesting to see. There's about 2 hours to the close. It'll be interesting to see if the advanced decline line starts to move higher, or if the market rolls over into the close. And this is July the 14th, 2022. Some analysis we are sharing, some easy language code for the current market cycles that we're seeing the last couple of months. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.